Joining me now to talk more about the path forward for equities is Vance Howard. He's the CEO and portfolio manager at Howard Capital Management. Vance, great to have you in the studio. What do you make of this market and the reaction to the jobs report today?
I think it's a great number. I think everybody ought to be positive. I think you may get a V up in this market. We may see new highs by the end of the year. We're predicting that we'll be over 6,500 on the S&P, which is a bold call. But I think we're going to get there. There's too much cash, too many good things happening, and tariffs are going to be done with in a couple of months, and I think it's going to be full steam ahead the last 2 quarters.
Okay, take us a little bit deeper on that. We do know there is a lot of cash on the sidelines. We do know retail traders have been buying the recent pullbacks. The S&P probably now, let's say, within 8% of its all-time high. You think tariffs are only going to last a few months, the impact, is that right?
I do. I mean, from what we're reading and hearing and people we're talking to, he's got 16, 17 that are in the room right now. Negotiations are being made. We've got one that's either done, but they're not going to announce that one because that's going to be the framework for all the rest. So once they've got that one complete, I think you're going to see the other 16 or 7 start to domino down. And if you think about it logically, for the last 2 quarters, if he comes out with just 1% better in tariffs, 1% than what we're sitting today, we're better off than we were yesterday.
How can the economy absorb that, though? Absorb what we're hearing about in terms of the pileup at the ports, concerns about empty shelves, and higher prices?
I think that's way overblown. I think it's just hyperbole. I don't think it's going to happen. I think that's unrealistic. I think that a lot is going to happen in the next 2 to 4 weeks, just like the Treasury Secretary's been saying, and I believe what he's saying. China can't keep up. You know, Treasury Secretary said that it's a 1 to 5 for every one piece of equipment or piece of merchandise we're getting hurt with. China's getting hit with 5. They can't keep up. It's unsustainable. They've got to come to the table.
And we did hear, of course, overnight, also helping equities this morning, is that China is considering talks here with the United States, according to one report at least, starting to exempt some goods, accounting for about half of its impact from the U.S. In terms of how you're allocating a portfolio or what you see as healthy allocation in this market that you're bullish on, Vance, what can you share?
I think you need to be pretty nimble. I think you need to be pretty quick. I need to take some profits there, maybe set some tighter stops until the volatility starts to calm down, which it will. But I think as the volatility calms down, there's so many great buys. You know, I was talking the other day about Salesforce. It's come down, and on a technical basis, it's down 18% year to date. It was down 26%, now it's down 18%. If Salesforce just gets back to even, you had an 18% return. There's getting some fantastic buys out there.
Technology, are you solely focused on U.S. equities?
We are. And I think there's a lot to believe in our U.S. equities market. I think they're going higher. I think technology is undervalued now. I think it got needlessly beaten up. And I think there's tremendous opportunity for institutional investors and individual investors, everybody.
I see here the S&P 500 heading for its longest win streak in 20 years.
Yeah.
Thinking back 20 years, that would have been 2005.
Yeah, it's a long time.
That is a long stretch.
Will we get a modest pullback? Yes, but that's just the sawtooth effect of a market moving higher.
Yeah.
But you've got so much pent-up demand, so much cash on the sidelines, and so many great values. People are taking advantage.
Yes. Okay, so Salesforce is a stock you like. It is actually listed here at the New York Stock Exchange. Any other opportunities that you see in this market?
I think that look at the Magnificent Seven. Look at NVIDIA. I think some of these are going to come roaring back in the last 2 quarters of the year, and I think that if you invested today, I think 12 months from now, you're going to be happy.
Yeah. Okay, so let's talk about the Fed and what it is set to do on interest rates. The last we heard from Fed Chair Jerome Powell, he did share that he anticipates tariffs might have more than a transitory effect on inflation. We heard in the wake of this better than expected jobs report this morning from the president that he wants the Fed to lower rates, as we see other central bankers doing around the world, notably in Europe. Does that change the course for borrowing costs?
Well, look, I think Chairman Powell's been behind the curve from day one. I can still remember in 2018 he raised rates for, I don't even know, nobody even knows the reason why, but it dropped the britches out of the market, knocked it down really hard. Nobody knows why he was raising rates and why he's not lowering rates now with the data that's coming in. He says he's data dependent. Well, he's data dependent. He should be lowering rates.
So we will hear from the Fed next week on May 7th. It is in a quiet period right now, so it's not unusual. In fact, it is par for the course that we wouldn't be hearing from the Fed chair. Any other thoughts before that Fed decision next week?
I don't think he'll lower rates at that meeting because I think it'd look political, because he is getting a lot of pressure from Trump, and he deserves to be getting a lot of pressure. Even Jeremy Siegel's been saying he needs to lower rates. I mean, we're just getting it all over. He needs to lower rates. There's no reason for them to be this high. And, you know, inflation appears to be under control and appears to be slowly dropping. Energy prices are, barrel of oil is under, $60 a barrel. It's starting to look pretty good.
Vance Howard joining us in studio. He's CEO and portfolio manager at Howard Capital Management. Vance, thank you.
Thank you.